Hello, good day, all of you on the internet. This is the International Crypto Asset Ninja speaking to you. And as before we start, usual disclaimer: I am in no way any form of financial advisor. All information shared here are for pure entertainment purposes only. So if you want to follow our content, remember to like, subscribe, and comment below. And for those of you looking out to trade and invest in cryptocurrencies and want to keep your crypto assets safe, be sure to check out some of the stable and secure core hardware wallet that's available out in the industry. I personally use some of them like the Ledger Nano S and Trezor. And you can find the link below, and as well as several other perks I've also shared below. And if you like the content, feel free to donate to the addresses below. And let's dive right in. Okay, so for today, we intend to share the growing optimism and also the growing interest around the crypto sphere. And in doing so, we shall take a look at the overall crypto market capitalization, the size of the market in comparison to the overall financial markets, which is in a trillion dollar market share, right? So taking a look at this trading view, okay, we see that the market capitalization, okay, historically, let's take a look. The total crypto market capitalization, okay, over here we have only records from 2014 onwards in the order of 3.086 billion. Okay, it took a long 3 years for it to be volatile up and down around the 3 to 4 billion range before it ascends rapidly in the 2016 2017 period of time, and whereby the market saw exuberant interest in ICOs as well as launches of more and more cryptocurrencies. And the market saw market capitalization appreciate from the initial 3 billion levels right up to the first couple of high was at 51 billion as early as the first May of 2017, and subsequent pushes of further injects of various cryptocurrencies and investments rose all the way. And you can see the second peak occurred at around 155 billion and a short retracement to 130 billion in around September of 2017. Okay, after taking a short break, the can see the market capitalization in total rose up to as high as half a trillion dollars, and that was the peak in 2017, late 2017, December, before it starts coming down. Okay, that's when the cryptocurrency had a major correction, and have ever since then, we have been supported quite comfortably above the 100 billion mark for market capitalization in total for crypto market. And since then, we have recovered pretty well, and we are still in the period of massive consolidation, volatile markets. Okay, previous testing the high of 300 billion again before coming down, and now we are currently at the level of 266 billion. So, what does that mean for the overall crypto sphere? Taking a look at this overall capitalization, now let's zoom into what are some of the major players. Okay, so the biggest of them all will be Bitcoin, following closely to the overall market capitalization chart patterns up and down. But you can see the consolidation is much lower in this case for Bitcoin, and it tests repeatedly several support points and seems to be stabilizing around a mid level of 70 billion or so. Okay, then it means that the longer this period of consolidation typically means that more supported, and it verifies the support lines and means that the subsequent bull run will be more robust to come, hopefully. And next we look at the overall comparison. Okay, Bitcoin in comparison with the rest of the community is taking about 63.75% of market capitalization dominance. That's more than half. Okay, and you can see during the previous crypto bull run, uh, Bitcoin share actually capitalization dropped because of the major rises in all the other what we call altcoins prices. But because now market is in the period of consolidation, so all the altcoin prices are relatively depressed. So as a result, Bitcoin capitalization dominance is great in this kind of consolidation market. Ethereum is taking about 10% of the market capitalization, and the third rank it will be Ripple, taking about a 3% market capitalization according to this trading view. And the rest of them are quite varied. The fourth being Bitcoin Cash at 1.5%, the fifth being Litecoin at 1%. I think this is talking about typical ranges of various cryptocurrencies subject to change. So as you can see, currently the market capitalization is on the down, but we are consolidating still at much higher levels than we've seen in as early as the 2016s, okay, which is in the single digit billions. Right now we are in the double digit billions, pushing towards 100 billion market cap for Bitcoin alone. So that indicates a progressive inflow of interest, and even so during this period of COVID-19 crisis, this pandemic, we still see relatively sustained interest. Okay, now over at the news from Cointelegraph, we see that report about the increasing number of professional traders, institutional traders, okay, from credible indicators such as the Fidelity Digital Assets reports. Um, we see that the rise in the number of institutional investors who are beginning to get involved in the investment of cryptocurrencies for their portfolios, and the derivative volume increased to an all-time high in May this year, totaling about 600 billion, while the total spot volumes increased from 5%, okay, into 1.27 trillion. And an encouraging sign over here, as we know that institutional investors tend to be one step ahead in spotting the investment. So before the mass market of retail investors rush in, so having interest, increasing interest from the institutional investors is a good sign for us. And next, we move on to another positive news. Question: Crypto custody market overview. Who are the biggest players over here? So, taking a look at the roles, as previously more and more big players are coming into the market, we see that according to the US SEC, Security and Exchange Commissions, institutional investors that possess customer assets that's worth 150,000 or more are required by law to place their holdings under the control of qualified custodian, meaning that the tracking of the increase in the number of custodians also means an increase in influx into the crypto sphere. So, what are some of the entities that are considered qualified custodians of crypto assets, like banks, savings associations, registered broker dealers, futures commissions merchants, foreign financial institution? All these are just five included institutional bodies that are under the qualified custodians of cryptocurrencies. And with this increase in more and more such bodies that hold become qualified custodians of cryptocurrencies, it will only mean that more and more influx of funds will be going into the crypto market. And as of now, Coinbase is still dominating the custody market, as we can see over here. And with global market uncertainties, the trade war, and political turmoil, in particular between the East and the West, have resulted in crypto increasingly becoming a safe haven, an alternative perhaps. More and more crypto firms are gaining awareness of the huge potential and current market gap for the onboarding institutions to the crypto world. This marks an important shift in crypto giants to win over Wall Street. So pay attention to this. Increased custodies, increased custodial hold of cryptocurrencies will mean big when huge funds are coming in. We have more and more choices. Okay, and next up, insured crypto custody services. This is a key to institutional investment growth? Question mark. Now, global conglomerate believes that the insured custody services is key to cryptocurrency institutional investment growth. So let's take a read at this. Now, what are the crypto custody services? So, as shared previously, like a bank or trusted regulated financial institution. Um, so, in holding on to this, they share in this article that some main reasons for having custodial services is that to risk reduction and regulatory compliance, so that they are permitted to operate in various countries according to their regulations. Okay, typically amounts involved institutional investments are much larger than a typical private investment. So online storage such as exchange and other digital wallets will pose too much of a risk for institutional investors. So so what do they think of is instead of going to all these online sources or online wallets, they look for regulated custodial service to keep the funds secure, especially cryptocurrencies. And some of the regulatory bodies around the world, such as the U.S. Securities Exchange Commissions (SEC) or the United Kingdom's Financial Conduct Authority (FCA) and Singapore's Monetary Authority of Singapore (MAS), they require huge institutional investors to keep their customer funds in regulated custody. So, what does it mean? That they have to be handed over to a third party, all right, regulated third party. So, with this, Kara Kennedy, custody product manager, Bank of New York, Mellon, said in a research article that given the market interest, custodians should be considering their capabilities in relations to cryptocurrency servicing. But in order to advance, the industry must collectively overcome issues and uncertainties which remain outstanding. What are some potential market impact if institutional investors are lured in as well? So, if you want cryptocurrencies to be treated like a traditional asset, you will need to offer regulation and custody options that resemble that available for traditional financial instruments and models. So, you see the hits of various companies and investment related services are recognizing the need to start respecting and recognizing cryptos assets as a viable investment instrument and assets, and that bodes well for investors. So yeah, see different companies names, you see Cointelegraph, as the report goes, from several places. Okay, associates from Cambridge Associates. We have the startup Media Shares CEO Jean Massey also shared that big companies like BlackRock, Vanguard, State Street, BNY Mellon, they are recognized as some of the largest institutional investors. And if they begin to adopt blockchain and cryptocurrencies as well, definitely you will see a shift, massive new investments from the retail, which means the big market is coming in, okay, taking the lead from the big institutional investors. Good news for everybody. Now, Galaxy Digital Holdings Limited founder, one of the bigger names in cryptosphere, Mike Novogratz, also said in a recent interview with Bloomberg, over the next 6 to 12 months, you're going to see institutional investors put in small amounts of the assets in digital currency. Small amount of institutional asset is a lot of money. So according to him, the inflow will set the stage for a rally and will push Bitcoin past the current high. Okay, so that will attract the retail investors to go in. So good news for us. Okay, next. Demand for crypto custody rises with increasing cryptocurrency trading, as shared with South China Morning Post. So here, Jolion Elwood Russell, partner at Simmons and Simmons, said as custody of crypto assets not regulated, users would have to rely solely on the terms and conditions of the service contract in the event of losses. So there's still a lot of legal issues not reflected in the documentation. So meaning that there's still room to grow in this area of custody. Next, and data-driven investor shares over here that the rise of digital asset custody solutions. So around the world, people are beginning to recognize and take actions to legalize and regulate cryptocurrency custody that will attract the huge investors into the market. Okay, digital asset custodians, as mentioned previously, again and again. Okay, it's like a traditional financial institution for customers who need their assistance. Good for onboarding. Okay, for first-time digital asset investors. And then you can see here what do they provide: financial control, guardianship, multiple user accounts, smart control, cybersecurity, insurance for the assets, very important, and diverse asset management. You see the logo of Ethereum, Bitcoin, Litecoin, you know, and so on. So um, next we move on to this article by KPMG. So in this KPMG article, they are also doing a study on the feasibility. Okay, every participant in the market needs a way to safely store and move their crypto assets, and institutional investors included will not risk holding on to their crypto assets if their value cannot be safeguarded in a way that their cash and stocks and bonds are. So even big firms, the big four auditing firms are coming in, okay, recognizing the need to provide solutions. So evolving model. So here you see a summary. They say that the asset holder will actually transact and pass the management over to the asset manager, which is the front office facing the customers, which will then return the inputs to the middle office, the back office, where the market does the clearing houses, traditional exchanges, market makers, and all this will feed on their transactions to the crypto custody and exchange. Key custody, transaction, list of prices, order matching, liquidity, compliance, a huge part of this. So pay attention, the big four are also taking action. So combination of self-custody, crypto exchanges custody, qualified custodians, three levels. Okay, and they are trying to inject more into the qualified custodians level. Okay, so here most of us, if we have no access to the qualified custodians, on we depend on our own wallet, which advisably we should not keep it in hot wallet, which is the online wallet. We should be keeping it in the core wallet under our own hardware. So if you're looking at storing your cryptocurrency safe and secure, be sure to check out the link below that I've shared on Ledger Nano S and Trezor. Both are credible hardware wallets out there which can safely keep your cryptocurrencies offline. And even if you lose your hardware, with the recovery key, you can easily recover all your assets in the new device as well. So be sure to check it out below. Importance of custody. So if you want to read, I have this area for you to download the PDF. I'll provide all the links below, so later on you guys can download it. So just to sum up the things covered, okay, they KPMG is exploring the feasibility of next gen security and resilience, creating a possible like conducive environment for crypto assets custodians and aspiring agencies or organizations we wish to build on sustainable business in this emerging financial ecosystem. And they also aim to cover comprehensive compliance for rules and regulations of various jurisdictions to protect the interests of their investors. Third party trust, implementing and monitoring a control environment to achieve attestation and security standards. You know, reports, providing reports, and also leading standard setting. Now, value added custody. Take a look at this. Okay, keeping pace with rapid technical change and think broadly about how they might want to drive future revenue opportunities. Now, the very last article I'm sharing today is how big is the role of digital asset custody in the enterprise adoption. So all this goes way back. Okay, the early adopters will always be the ones who get to benefit and trigger ripple effects for the rest of us. So, um, they say over here in this article, okay, Iqbal Ghanem, the managing director of crypto-friendly trading platform eToro, one of the bigger ones out there, is shared that there are basically four components we need to work, okay, for crypto to work. First is regulation, and that is happening. Okay, rest assured, all around the world, countries are recognizing the importance and the need for regulation to be tailored, customized for the new crypto sphere. Second, we need custody solutions as mentioned throughout the whole video today. Third, we look at the, that's number three. Second, okay, third party custody solutions being developed. Now, two other components, structured products such as Bitcoin ETF, exchange traded products will make it more available for retail investors to gain reach into the market. Utilization, such that he feels that it will help to encourage a wallet adoption. And then next, we also look at mm, what else do we see over here? Da, 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 da. Okay, yeah. Basically, to sum up, it says that the cryptocurrency needs to prove that it can safeguard the assets from institutional and enterprise investments before the retail investor starts coming in, individuals who are using exchanges. Logical step. Chinese cryptocurrency exchange F's Coin shut down its doors, owing about 125 million to its users, which is promising to pay back, but without much qualification as to how. So these are still teething issues you see around the world that makes it imperative for people to move fast in regulation and custody solutions so that to ensure that the smooth transition of huge funds coming in into the crypto sphere. So as we can see here, Rebecca Espler, Director of Blockchain at Unbound Tech, explains that custodians safeguard the assets, minimizing the risk for investors, the risk of theft or loss. As such, should be trustworthy vendors. Okay, institutional investors, alongside with regulator, require that crypto custodians to follow on fiat-related regulations and guidelines such as KYC, know your customer, and compliance checkups, periodic account status reports, approval of withdrawals according to segregation of authority guidelines, and at best insurance of assets by the vendor. So all this are being recognized and being worked upon by all these huge names out there. Okay, so they are serving, you see, seeing companies picking up the metal and providing secure custody solutions for even institutional customers such as Fidelity and Anchorage, all part of the Libra organization. All right, so that's it for today's video. I hope that it's been useful for you. So till the next time, be sure to like, subscribe, and comment at the link below, and I'll see you soon.